Hello, and thank you for attending this webinar on small business risk management best practices. I'm your moderator, Jenny Alton from the New York Small Business Development Center Central Office. As your presenter today, we have Rick Kravitz, Editor-in-Chief of the CPA Journal, Managing Director of Content and Publishing for the New York State Society of CPAs, and Adjunct Professor with Texas A&M University. This webinar is brought to you by the PACE Small Business Development Center, one of the 20 campus-based centers and many more outreach offices of the New York Small Business Development Center. The NYSBDC is a U.S. small business administration resource partner. Our free advising, education, research, and advocacy services are made possible by funding from the SBA, New York State, and our host campuses. We are recording today. Attendees are muted and will not be on camera. Your chats will only be visible to me, Andrew Flam, who is the director of the PACE SBDC, and he will address you in a moment, and of course, our presenter, Rick. If you have any questions during the presentation, please don't hesitate to type them in the Q&A box as they come up. You can open Zoom's Q&A box from the Q&A button at the bottom of your Zoom window. We will take some periodic pauses during the presentation to address your questions. And with that, I will turn the time over to Andrew Flam, Director of the PACE SBDC.
Great. Thanks so much, Jenny. Good afternoon, everyone. My name is Andrew Flam, as Jenny had mentioned, the Director of the PACE University Small Business Development Center. We're based here in Lower Manhattan, and we serve businesses based in the southern portion of Manhattan as well as much of Brooklyn. Delighted to be here today and to partner again with my colleague Rick Kravitz, who has a terrific presentation ahead and making this available through the NYSBDC network through our arrangements with Jenny Alton, who's been a great partner. So thank you, Jenny. As Jenny mentioned, our center is one of 20 located throughout New York State, and we provide one-on-one business advisory services as well as a range of training programs such as this to small business owners as well as aspiring entrepreneurs. And all of our services are offered at no cost. So if you are not working with an SBDC advisor at one of our campuses, whether here in New York City through us or through one of our other colleagues, would certainly encourage you to do so. I'll put a link in the chat in a moment about how to sign up for one-on-one advisory services in just a moment. The form just takes a few minutes to ask very basic information about who you are, where you're located, what you need help with, and then an SBDC staffer will follow up with you to set up that session. So hopefully, if you're not taking advantage of them as of yet, this will be something you'll be doing in short order. We also, as I mentioned, our training programs are offered throughout the state. This is one example of them, but our colleagues from throughout the other centers as well. You're certainly more than welcome to take advantage of those and participate. And as you kind of get kind of under the hood, so to speak, in terms of particular issues that are important to you as a business owner, and then to follow up with an individual business advisor to help you kind of tackle that more thoroughly. So I'll put a link in the chat in a moment that provides information about upcoming sessions that are available, both the webinars as well as in-person sessions that you can avail yourselves of. Two in particular, I want to make sure that I highlight specifically through a partnership that we've had with the New York State Society of CPAs. We're delighted to be hosting another CPA accounting clinic where we'll be offering one-on-one sessions available for small business owners to connect with volunteer CPAs through our partnership with the Society. And they've been just terrific. And Rick has been kind of essential and focus on that arrangement. So we really appreciate that, Rick. So if you are interested in meeting with a CPA to kind of discuss specific issue areas with regard to your business as part of this clinic coming up on June 18th, I will put a link in the chat where you can connect with us and let us know more about kind of what your inquiry is. These sessions are available to all NYSBDC clients. So if you're not a client yet, this will be a way for you to kind of take advantage of that program. And one other event I'll kind of also plug very quickly is we have an upcoming Meet the Small Business Lenders financing event as well as networking component on July 15th. That's in person here at PACE University in Lower Manhattan. So with that, I guess I will look to turn the floor over to Rick again. We really appreciate you all joining us for today's session. Hopefully you'll get a great deal out of it. There are a lot of topics that I think really are honing on kind of how to be, best manage and kind of operate your business, and making sure that you've, tackled all, things that might be under consideration to be able to maximize, resiliency, and maximize, your ability to continue to sustain your operations here in New York State. So thank you all for joining. And I'm delighted to introduce my colleague, Rick Kravitz, who will take it from here. Rick, thanks again for being kind of a value partner and for leading today's session.
Thank you, Andrew. Thank you, Jenny. I'm Rick Kravitz. Really honored to be here today to discuss how to embed ERM, enterprise risk management practices, best practices in your business. For the past 7 years, I've been teaching graduate level courses in risk management at the Texas A&M School of Law in their LLM Master of Legal Studies program. So while I wrote these courses, a great deal of what I'm presenting today is what I've learned from my students, all of whom are successful senior executives in their 40s and 50s who are taking this unique program. And these included the former CEO of Hershey's, Texas Racing Commissioner, corporate counsel at Microsoft, hospital executives, engineers, and technology executives at Amazon and Google. So how many times have you heard this? No one could have seen it coming. This is the typical response given by many senior business executives who ignored the warning signs of disaster. Highly compensated senior managers fail to identify, measure, manage, monitor, and mitigate critical risk within their organization, regardless of their size. There have been dozens of these disasters, and their impact on society has been significant. The Challenger disaster, a 10-cent O-ring that was not tested in freezing conditions. The Lehman Brothers implosion, hidden off the book liabilities in the billions of dollars that caused the Great Recession. The Boeing airplane crash, the inverted autopilot messages, the Fukushima nuclear meltdown, the BP oil disaster, and GE's recent loss of more shareholder value than any company in global history. But you're probably asking, well, what does this have to do with my business? How do these examples have anything to do with my small business? Well, the fact is that there's a common enterprise risk management issue that impacts all businesses, and that inattention to risk can result in more value destruction regardless of your size. The principle of risk managements are the same for large businesses and small to medium-sized businesses. And there are tools and techniques that can protect all businesses, whether they're individuals, entities, or major multinational corporations. So we're presenting in this presentation, we're providing small to medium-sized business owners and entrepreneurs with the tools and techniques to identify, monitor, and mitigate both tangible, that is visible risks, as well as intangible or hidden risks within your organization, no matter what your size is. And whether you're a solo entrepreneur or build a business with a number of employees, inattention to ERM and now the speed and velocity of risk can lead to severe business interruption and long-term value destruction. So this presentation discusses best practices in identifying, measuring, monitoring, reporting, and mitigating enterprise risk. So here's some of the risks that we face today. First of all, we could talk about, and I'm going to talk about in depth on these, systemic risks. We're going to discuss cloud computing, backup systems, technology infrastructure, cybersecurity, and complexity. And 2, human capital risk, the issues dealing with partners, employees, vendors, suppliers, bankers, and others. And 3rd, we'll talk about external risk, risks you have no control over, including supply chain sourcing, healthcare and pandemic risk, geopolitical risk, if you have products and services that you're outsourcing to other countries. And then there's reputational risk, all about how your customers, your distributors, your sellers, and others in your ecosystem view and value your products and services. And then there's governance risk. It's G in the ESG that you've probably heard about. All about your board, your mentors, your advisors, and whether they're steering you in the right direction or have ulterior motives. And finally, we'll show you how to build a simple risk management matrix. Every company should have one, no matter their size. And in study after study, it was shown that senior business executives, they're visual learners. So this risk matrix is probably the best way to show your understanding of inherent risk within your organization or business. But first, what do we mean by enterprise risk? In short, it's really about formally discussing the visible and hidden risks in your business on a continuous basis. For example, in your budget meetings, in your quarterly meetings, in your management meetings, to even talk about the risks in your business that can impact long-term viability. And in so many studies, the fact is that in most businesses, leaders and executives, entrepreneurs and senior managers, just number one, don't formally discuss or report risk issues, performance risks in weekly, monthly, quarterly, or annual budget meetings. Two, they don't assign risk management governance to any individual within the operating team. And in many organizations, risk management is left to legal issues of contract management rather than operational risk. And this is not a viable solution. And third, in most organizations, they don't have a formal risk management plan. They don't categorize risk or even measure its importance to your business. So the focus of this presentation is to identify also your risk appetite. How much risk can you tolerate? Present a case to include enterprise risk management techniques in your day-to-day work. Focus is on developing a formal risk management program that anticipates, identifies, and assesses the critical risks that can impact long-term success of your business. So the next slide is we're going to discuss these 5 risk elements: systems risk, capital risk, supply chain risk, reputational risk, and governance risk. So let's look at first systemic risk. These are the internal risks, including hardware and software applications that many of us take for granted. I'm going to discuss very briefly 9 or 10 of these, just to raise your awareness of the issues and to prepare you in the event that if your systems shut down, slow down, or are hacked, what you need to do. As you know, today, many of your applications are totally outsourced, but do you have an inventory of your systems that are in the cloud? Do you have any physical backup of your systems, or do you depend 100% on outsourced suppliers? More and more cloud-based systems companies are being consolidated today. Not all invest in technology to limit entry of international hackers. Now, do you have any reliable storage data areas? If one of these cloud-based applications is hacked or made inoperable, do you have any backup whatsoever? I think it's absolutely critical today. A study, here's one of the case studies that we talk about. GPS. Do you use GPS in your work? Do you depend on commercial trucks, businesses, or railroads? 100 million cars that have GPS. Well, GPS has been hacked. Funds have not been allocated by Congress to provide any redundancy or backup of GPS fails. And in 2019, a British oil tanker was lured into the Iranian Straits of Hormuz by spoofing the Iranian GPS satellites. And then hackers also interrupted the GPS signal to commercial jets at North Carolina's Wilmington International Airports. And you should know that electric power plants are on the GPS technology to synchronize generators and distribute energy to the power grid. And incidentally, the United States power grid is owned by a company in a foreign country. So let's look at some of these specific systemic risks. Cloud computing. For many organizations, cloud computing has been a game-changing development, especially for small to medium-sized business. Now, of course, companies appreciate the ability to purchase services as needed, to use software that larger competitors use, not limited by infrastructure investment cycles, and take advantage of the continuously upgraded software without having to make significant investment. However, what are the traditional controls, irrespective of the size of the business, to mitigate business risk? These are general controls such as segregation of duties, separation of functions, and logical security. Do you monitor the completeness and accuracy of your input? Whether you're calculating correctly, whether you're processing the formulas correctly? And do you periodically report relevant metrics and information to those charged with governance? Output and results are fully dependent on the accuracy of your input. Do you monitor this continuously? AI, and of course, everybody's really crazed about AI. It paves the way to resolve better issues, better addresses business challenges. But the real question is whether can you really rely on the data used? Do you know their sources? Are they accurate? Are they timely? Should certain data sources be excluded once you become aware of their limitations or inaccuracies? Case study. A local New York attorney, sole practitioner, wrote a brief using AI. In particular, it was ChatGPT. Cited a number of cases that would prove the innocence of his client. But unfortunately, a number of the sources were not only inaccurate, but they were wrong. ChatGPT actually sourced false information, and the attorney in New York was disbarred when the facts came out. Case study 2. One of my students was a senior hospital administrator at Chicago General Hospital. So management couldn't understand why they had significantly worse outcomes for young Black and Hispanic females on certain emergency procedures. The question was why? Well, it turns out they were using AI and other artificial intelligence programs for developing optimal treatments, and they showed spectacular results. But in further examination, it turned out that the population used by AI for this procedure was older white males. It didn't work. Another area of systemic risk, of course, is intellectual property, business method processes, risks. Do you have any patents, trademarks, trade secrets, copyrights? Have you filed with the Trademark and Patent Office to protect your intellectual property from competitors? How do you protect them? Do you keep your processes locked up? And don't forget, there's a patent for business methods. Have any of you actually applied for those business method patents? Systems, flows, and proprietary processes are patentable and protectable. How about trade secrets that are both owned and licensed? How safe are they in your organization? If an employee leaves, for example, can they copy them? Can they become your competitor? In Silicon Valley, case study, many times startups by 1 or 2 entrepreneurs result from an employee leaving one company and taking a business method or intellectual property process with them. What safeguards do you have regarding IP? Do you limit access or limit data management to certain trusted partners or employees? Internal controls, of course, can be real risk mitigators, even in small business. And let's talk about some of the applications here. For example, how do you handle payment processing, billing, cash application? Do you employ best practices? Do you separate billing from cash application and have someone else do bank reconciliation? And we'll give you a couple of case studies of tremendous failures there later. Cash processing. Do you have plans in place to safeguard your cash and revenue from hacking or misappropriation or fraud? We're going to discuss later on how one individual in a small organization stole millions of dollars, one individual over a 10-year period no one even knew. And then interconnectivity. Are your systems and subsystems connected? How well do they speak to each other? And more importantly, how well do they speak to you? Case study. In cockpits of airplanes, there are various levels of controls over risk, from red warning lights to control column shaking to red text messages coming from the cockpit screen. What happens if they're wrong? It gives you the wrong result and you make the wrong business decisions. In another case study, in the nuclear disaster of Fukushima, the warning signs were so confusing. There were so many that workers couldn't manage it. Target, the Target Corporation, the department store. Case study, open stores in Canada. It bought a German ready-made supply chain management system, best in class. But because there were so many fields to fill in, human error, little mistakes threw a big wrench into Target's supply chain. Result, there were half-empty shelves when they opened, warehouses were overflowing with goods, a clogged distribution system, and everything happened so fast, Target actually had to shut down all of its Canadian multi-billion-dollar adventure. So little mistakes result in big disasters. Data governance. This is really a critical issue. What do you do with your customer data? How do you protect it? What do you use it for? And can others outside of your organization access it and sell the data? What do you tell your customers or vendors or suppliers regarding ownership of your data? Clearly, you all remember the Equifax breach, 1,500 different data sources coming into Equifax, and they didn't protect it. Or the theft of data from one of the largest health insurers in the Midwest. So how do you protect your data? And probably the most interesting part of systemic risk is managing complexity. Are you using brand new state-of-the-art software? Is it so much more flexible than you actually need? There's a maxim that the greater the flexibility, the greater the potential for error. Case study. Classic case, as you recall, BP oil spill, Deepwater Horizon. Deepwater Horizon, a marvel of engineering. It took as many as 30 buttons to control a single safety system. It had an emergency handbook in the hundreds of pages with so many contingencies that it was hard for any human to follow. Deepwater Horizon's safety system actually paralyzed them due to their inability to manage complexity. And then there's a couple of others very shortly in terms of systemic risk, business model risk, going concern risk. Is your operation meeting the needs of your audience or your customers? And how often do you review your business model? How often do you revise its mission and purpose? Do you do this every year? And talent risk, something that's popped up over the last couple of years. Is there a shortage of labor or talent within your industry or firm? And what are you doing about it? With intern programs or reaching out to tech schools or community colleges help meet this shortage? And overall, in your organization, whether you're one person or a number of people, product stewardship is someone responsible and accountable for logistical support and management over your products and services. So let's now go number 2, human capital risks. Now, as you know, business is all about people, no matter how technologically savvy you are. It's all about business behavior and business personalities. It's also dealing with and working with disparate types of personalities, and that's a core competency and a critical success metric in risk management. How well are you dealing with your employees, with your customers, with your suppliers? The question is, do you provide clear instructions? Make sure your messaging and intentions are clear. Are they understandable? Are they transparent? I worked in the Netherlands for a number of years, and managers were graded by their subordinates as well as how savvy they were in understanding the mission and purpose of their organization, how effective they were at communicating down to the various levels of the organization. Very critical, no matter what your size. And while you may only have 1 or 2 employees or partners, or you're working with family members, there have been so many cases where employees and family members have extracted data, information, and actually have stolen from the business. So my question is, how well do you know your ecosystem? And are your employees bonded? Do you do security checks or background checks? Do they have NDAs, non-disclosure agreements? Is there any substance abuse among family members that you have to worry about? And this is true dealing with subcontractors, suppliers, bankers, and other financial services providers. How well do you know them? Do you know that what their motivation is with working with you? And what kind of relationship are you able to maintain? The takeaway about human capital risk is that you really need to look at those additional safeguards to prevent theft of business information, theft of intellectual property. And there are times when a bank or financial institution might ask you to reveal some of your trade secrets, your business processes, your business methods that are unique to your business, but they would also provide competitive advantage if they got into the hands of competitors. So you really need to be careful, frankly, of what's being asked of you and how much information you're going to give them. There's another thing in human capital we call turnover risk. In startups, as you know, many times turnover is high. Personality conflicts get in the way of building businesses, but they have to be recognized. And in some businesses, a personality test is actually required. So you know the type of personality and the behavior of that individual you plan to hire. You have to know whether that personality that of the person you're hiring is compatible with your personality, no matter what it is. And in the event of conflict, how they deal with conflict, how you deal with conflict, and whether your goals can remain aligned. Then there's accounting control risk in terms of human capital. That is, it's all about money. There's certain fundamental safeguards that are critically important, even in a small organization. Are there segregation or separation of duties? Does the person who does the billing open the envelopes, process payments, make deposits, and issue refunds? Do you sign off on the refunds, approve returns, review inventory if you have inventory that's damaged, if you have those damaged goods? Case study, and this is a classic case. This went on for 10 years. A small town, Dixon, Ohio. The accounting clerk headed the accounting and bookkeeping for the city government of Dixon, Ohio. She was responsible for refunds, following up on bad checks, debts, theft, inventory shrinkage, damaged goods. The older woman, right before she retired, well, she did all the property tax billings. She opened the mail. She deposited the checks. She recorded the checks in a ledger, performed bank reconciliations over a decade. What's wrong with this picture? Well, what's wrong with this picture is when she retired, this is over a 10-year period, the town learned that she had 2 bank accounts. One that she deposited, and both she deposited checks in them. One was for her and one was for Dixon, Ohio. Millions of dollars were fraudulently stolen from the town, and they didn't even have any insurance to cover this. So even in a small operation, it's absolutely critical that you oversee the separation of your operations when money is involved. So next, let's go to the next slide. Let's look at next risk area. These are black swan risks. A lot of books have been written about black swan risks. It's the edge of the bell curve. Books call them exogenous risk or external risks. But let's look at these black swan risks. These are the risks you have no control over by definition, but are large-scale events that lie far from the statistical norm and are largely considered to be unpredictable, but eventually experience massive blowups, catching everyone off guard, and then doing years of stability. The longer it takes, the worse the resulting harm to your business. Pandemic risk. Unfortunately, in the United States of America and government, there is no chief risk officer in the US government that oversees black swan risks. But I would argue, as far as pandemic risk, this is not a rare event risk. There was H1N1, there was H2N2. There was West Nile virus. There was hemorrhagic fever. There was SARS. This is around the world, SARS, Ebola. These black swan risks can interrupt your supply of products and goods that you need for your business. Illness in foreign tech companies. Illness at processing centers like at Amazon warehouse or food processing plants. They can have a serious impact on your business. And by the way, just as an aside, did you know that the word quarantine actually comes from the Italian quaranta, which means 40. Because back in the Black Plague, when it hit in the Middle Ages, the trading ships in Italian ports required their sailors to remain in port for 40 days during the Black Plague. If they survived, they could go ashore. So pandemic risk is not a rare event risk at all. And it's something you need to consider where your supply chain sources come from. And then there's geopolitical risk. The Ukraine-Russia war. The United States, 350,000 to 1 million businesses use labor, parts, materials, and technology services in lab testing equipment and lab tests from both countries. So do you have any alternative sources from a risk management perspective in the event they are not able to supply you with the goods and services you need? A good risk management program actually contemplates and anticipates this kind of black swan risk. Infrastructure risk, another one where you have no control over it. If you have a business now in the Southeast, the Carolinas, Georgia, or Florida, it's where I'm living now, because of rising groundwater, a study showed that 1 million septic systems are now in danger. And these are factories as well as individual homes. So do you source any of your products and services from these areas? The kind of pollution that can easily shut down factories and the tech centers. And I don't know if you saw this in the newspaper today, but in Atlanta, there was a massive water main break, infrastructure risk, like in Flint, Michigan, that occurred a number of years ago. Pipes that were built 100 years ago that nobody is overseeing. Could this disaster have been prevented? Yes. Could have been mitigated? Yes. If there was a risk manager in the states that oversaw groundwater risk, might they have mitigated this? Absolutely. And then there's legal risk, which of course you do have to consider. If you're sourcing goods or services from vendors or subcontractors or suppliers from California, you could be liable if the subcontractors or vendors or suppliers are using underage workers or illegal immigrants to do their work. Next slide. Reputational risk. Warren Buffett, and you've heard this before, Warren Buffett argues that it can take years to build your reputation, but it can be destroyed in minutes. So my question is, do you maintain a positive image on social media? Do you pay attention to that? How recently have you checked it? Do you have a reputational capital consultant or organization that monitors your business reputation on social media? Do you reply to the bad, responses? Are you a member of an association or organization in your business space? Do you contribute to any of these organizations? And then is your business stakeholder centric? How is your relationship with stakeholders, your lenders, your bondholders, your customers, your suppliers, and most importantly, your employees and their families, banks, lending institutions, financial institutions, and creditors? Do you know your reputational capital? Do you know the risk of inattention to reputational capital? Next slide. Governance risk. Just a few points here. Who are your mentors? Who are your family members who give you advice? And do you know what their motivation is? This is so classic and so critical in managing your business. Do you have board members or formal meetings with advisors, mentors, or family members who are assisting you? The question is, are they diverse thinkers? There have been many studies done about board competency. And this is fascinating and it's counterintuitive. 80% more bank failures when board members were all bank VPs, former bank CEOs, and senior executives. Let me say that. There are 80% more bank failures when everybody was a banker on the board. Now it's counterintuitive, but it's the fact. On the other hand, when they looked at banking and financial services entities, multi-year study, when consumers, successful business executives, and manufacturing firms, service firms, or outsiders were on the board, bank failures were significantly less. So my question is, are your advisors diverse thinkers? So let's go next to the next slide. So the takeaway is also, do you know what your tolerance to risk is? Of course, insurance companies play the game of risk with every one of their customers, but what is the level of risk that you can accept? And do you even discuss it or talk about it? What lets you sleep at night? What are you worried about? So the next slide, we'll talk about building a risk matrix, which incorporates your tolerance to risk, the level of risk you're willing to take in your organization. Now, in my graduate program, and let's go to the next slide. We all prepare a risk matrix. And basically, I believe that this is a critical document that should be included in your budgeting or your quarterly reporting or your discussion at board meetings or with your advisors and your mentors. It's a report on how you're doing strategically, how well you're doing strategically in your mission, and whether you're attaining your goals or need to change those goals to inhibit long-term value destruction, in fact. Let's go to the next slide. So I just filled a portion of this in, and this is in a hospital setting. So on the left side And this is also, executives are visual learners. So this is a perfect way to look at your business in one page. So what are the risks on the left side? Well, I just listed technology risk or strategic risk or reputational risk or human capital risk or, exogenous risk and supply chain risk. And then you look at what are the issues within that risk category. Well, in technology, it's phishing, social engineering, data classification breaches, malware, advanced persistence threats, credit card fraud, noncompliance, et cetera. And then to the right, it's probability. High, what is the probability that this will occur in your business? High, medium, or low? And what impact to the right, the next column, will it have on your business? Is it high, medium, and low? And if you are all highs, what are the actions that you need to take in advance? And what do you need to be prepared to do to mitigate those actions? So here it's training and awareness, security controls, firewall intrusion prevention, and others. So let's go to another risk matrix, which I think you can actually pull this right off the the internet. On the next slide, you'll see this is Workiva. This is also a workflow tool, but this is another way of looking at risk. So in this case, this is a store, a retail store. So in a store, you have to develop or acquire products. And what's the, and you can rate these, by the way, from 1 to 10. What's the impact of a bad design, 1 to 10? What's the probability that your badly designed clothing is not going to sell? And then let's say the impact is 10. The probability that it'll occur is 10 because you don't have the right people on board. And then you multiply it, so your risk rating is 100. So let's say that your merchandising is excellent. So the impact is 10, but the probability that it'll occur is 1. So you multiply 10 times 1, and your overall risk rating is 10. So now you have a high risk area, which is design, and you're going to pay attention to it. And if you go down through this and you multiply impact times probability, and you use the rating of 1 to 10 for each, you'll have a very clear understanding of where your risks are and what you have to pay attention to most. And I suggest that every business, no matter if you're a sole proprietor or a large organization, maintain some kind of risk matrix like this and look at it every 3 months, 6 months, 9 months, or even at budgeting time. And these may change too, but here it makes you identify what the risk areas are, and it makes you identify what the impact could be if something happens, what the probability of that happening is, and what your overall risk rating is. I can't stress enough. In my graduate program, all my students in all their corporations and businesses, and some are small businesses as well, they actually make this up, and it's a tremendous guide to the future. So let's go to the next slide. So in conclusion, today, managing risk is a critical differentiator between long-term value creation and long-term value destruction. And you just need to understand the risk elements, and most importantly, your tolerance to risk. How much can you take? How much of a gambler are you in order to generate a successful business? I think, is there one more? I forget.
No, that's the last one.
That's it. Okay. So I'll take questions, and happy to discuss any one of these areas. But the takeaway is you really need to think about this, not only your financials and your budgeting and your growth and your products and services, but you need to think about risk as well.
Thank you, Rick. So we have some great questions here. Well, let's start with the first one. Being in a post-COVID environment, how well does insurance cover Black Swan risks? What is the trend there?
As you know, insurance, especially property insurance, has gone up about 20% over the last couple of years. But in truth, there are a number of Black Swan risks that are not covered. Now, I ran in publishing many years ago, I ran the legal insurance database, the National Underwriter, out of Cincinnati. I actually had an apartment there. And just as a side story, the insurance capital of America in the 1880s was Cincinnati, Ohio. And you may ask, why is that? And the reason is because that's where the wagon trains went west. And the insurance salespeople would sell all the people in the wagon train life insurance. And it became the richest, most successful insurance capital of America, because nobody ever recovered, and no one ever, was paid life insurance. So, I guess the point is that you have to look at what your exclusions are in your insurance policy and whether insurance covers this. And by the way, I also published many articles and books on insurance coverage disputes, and that's constantly litigated. And, the insurance company tries for mediation, but, lawsuits can go over for years.
So as a reminder to everyone, I know we've been through a ton of information today and very quickly, so we will be sharing a recording as well as a copy of the slides. So you'll be able to refer to this information and go through and do that exercise that Rick has suggested as far as building out your own matrix. You'll have that slide available to help you as you look at doing that.
And Jenny, also, you can get a blank, you could download a blank slide from Workiva for nothing. Just have to give them your name. And there's a risk to that, of course, but,
Well, that actually leads into our next question, Rick. So this person is wondering about when you set up a business and you are going through all of the rigmarole of that, sometimes there is personal information that is involved in setting up that business. What are ways that you can limit the spread of that personal information when you are setting up a business? For instance, like the address of the LLC is made public and such. So what are your recommendations around that process?
I mean, that's an interesting question. That's why, by the way, a lot of businesses incorporate in Delaware. So they don't have to, and they keep a post office box or a mailing address in Delaware, and or pay someone actually to maintain a third party address, so that information is not given out. LLCs, LPs, partnerships and so forth, that's public information, but you can limit it by actually having a third party maintain some of that information with a post office box and something like that. So you don't have to give out all that private information. Oh, there you go. From David. You can also use a third-party address in New York using what's called a registered agent. That's exactly right.
Correct.
And
yes.
do it outside. You could do it outside of New York as well.
Yes. So definitely suggest that attendee look up registered agents.
Yes, that's great. Great comment.
Thank you, David, who contributed that in the chat. Andrew, did you have anything to add on that? Okay. So the next question, should risk be addressed in a business plan, or is it primarily an internal exercise?
Well, I would prefer that it be included in the business plan. It doesn't have to take away from all the financials and the strategy and the mission of the organization, but I believe business risk should be an essential part of a business plan and in the budgeting and the reporting of information. Absolutely. And in most companies, by the way, those tremendous surveys have been done. Business risk is mentioned only 30% of the time in the top 100 publicly traded companies at the boardrooms. So it's usually ignored, and it's really at their peril too, because you can see how large companies actually can miss it. And GE is a poster child for missing, hidden risk. Lost $600 billion over the last 5 years in some of their operations, and that they weren't overseeing properly.
Andrew, did you have any thoughts about that with risk and creating business plans?
I think on the business planning front, I would totally agree with Rick. One example I can sort of think of, Rick very astutely sort of referenced, supplier diversity and, ability to kind of have, he's got amazing, stories with regard to kind of how this is utilized. I think, when you're looking at, your SWOT analysis or thinking about, what are your threats to your business? And this is clearly, very clearly, examples of, things that could happen that if you don't have other options, do you have the type of supplier in place that can be able to, support what you're looking to do from a production perspective. So yeah, totally agree.
Andrew, might I share the REI example from one of my students? So one of my students was a senior executive REI, and we were talking about risk and supply chain risk. And she noticed that all of the manufacturing of REI was done in Canada. And then there was a border control. So before the border controls came in because of COVID, he set up 2 shell manufacturing plants, one in Mexico and one in Puerto Rico. And when COVID hit and she wasn't able to get her manufacturing from Canada, she actually started those 2 plants. And REI was never short of clothing, on the shelves at all their stores. So basically, I'm sure some of her people say, "Oh, you're crazy for doing this," but basically, she realized that there was a sole source supplier in Canada, and if they stopped and the supply chain was interrupted, REI would go out of business.
And that leads perfectly into our next question. So how do you manage risk when dealing with international parties, like sourcing products for e-commerce or doing exclusive distribution deals?
I think you have to be really careful, but also I think you have to keep your options open. I think that's the lesson and the takeaways, especially from companies in the United States dealing with businesses and outsourced products in the Ukraine and in Russia. You've got to keep your options open. And you have to have alternate sources prepared to go to, and maybe build those business relationships and say, look, I'm not ready to move to you, but I'd like to know that you're available if I need you.
Thank you. So we've gone over a lot of types of risk today. If a small business owner is just beginning to look at this topic of risk management, do you have recommendations on where they should start? What do you see as most essential for a small business owner to address right off the bat?
I think if you're starting up, I would look at the people you're working with. There's opportunity there, but there's also risk. And second of all, if you start taking in money, how is that money coming in? Who's overseeing it? Who's managing it? And is there one person that's depositing, if it's checks or PayPal or something like that? Is there one person overseeing it, giving refunds, reconciling the bank accounts, and managing and controlling the whole process? Because just think of that person in Dixon, Ohio, 10 years, a single person, and they did well because she had some of the greatest trips, and vacations anywhere, because she took a month off every year and enjoyed her life. Well, the expense of the poor citizens of Dixon, Ohio. And
Yeah,
by the way,
that
there's a maxim: if it's too good to be true, it probably is. Because the neighbors couldn't understand how this poorly paid individual was driving, expensive cars and taking trips all over the world. Well, it was too good to be true.
Yeah, definitely a very cautionary tale there. So you brought up human capital risks as an especially important area for small business owners to look at. And so with that, I know you mentioned during your presentation, like personality tests and things like that. Do you have any more recommendations around how small business owners can work on getting the right people that they know they'll be able to work with and to trust in their positions? What can you recommend around that for small business owners?
Yeah, some companies actually require, there are a number of personality tests which actually are very good predictors of behavior, especially in crisis. And you can just look them up. I forget the names I can actually get back to you on those tests, but we've tested a number of them, and they're very good predictors, because there's certain pet personality types that just don't work. They just don't work together. They may work individually, they may be very successful individuals, but they don't work in a startup situation. And I've been in a couple of startup situations in magazine publishing in the United States. I worked with the Rolling Stone people on an acquisition many years ago, and I could tell you that personalities are a critical factor, when you're dealing with creative types. So but I would say personality tests they are somewhat predictive. They could be, of course, misleading because you can mislead those tests. And then I would also find out, especially when we were starting up this was the New Look magazine, which was the Philip Hockey group out of Paris. We actually spent a lot of time finding out about how these people behaved in other organizations and how well they were respected and what the pivot points were. Because startups are there's high pressure, there's high turnover, there's high personality issues, and you've got to really for some stability and a sense of confidence, you've got to really work hard to make sure that it's the right team at the right time, in the right industry. Does that help? I mean,
absolutely. So we had a question on getting the recording of this session. So we will send that out in a follow-up email in the next few days, along with a link to a PDF of the slides. So you can look for those in your inbox coming up. So a question on reputational risk. You had mentioned negative reviews and handling those. Do you have any more suggestions on what to do when you get a negative review?
Two things. Number one, you have to respond. Number two, if it's negative, you have to improve it. And thank you so very much. We did not realize this was an issue, but we have dedicated our senior management team to changing it. And I guarantee the changes have been made. There's no more positive than accepting that it's a mistake and that you've changed it. And people, by the way, also, and from the human capital risk, are very forgiving. They're very forgiving. It's like mea culpa in law. It's my fault, but you know what? I figured out, that I figured out a solution that will satisfy you.
And to follow up on that,
I think being, reacting in a positive and proactive manner, I think is really important. And I think the counterpoint is also being able to cultivate and encourage, positive reviews. So I think it becomes, you want to have kind of a full, array of information about kind of who you are and what you do, and hopefully some of it is positive. So as you have kind of satisfied customers, figuring out ways to kind of solidify that, whether it's through success stories, through testimonials, through encouraging, positive reviews, whatever it might be, try and get that information out there as well. And that could be something also, the advisor can help for sure.
Yeah. To answer his point, if you have 9 bad reviews and 1 good review, well, I think you should start, taking that seriously.
Absolutely. So what about those cases? So sometimes sometimes it will happen that people might misrepresent what occurred in a review, a negative review, or there are cases where people will get reviews from individuals who haven't even actually worked with them. So how would you recommend handling those types of negative review scenarios?
Well, there are, consultants in this area that actually go through this, and they have standard responses to these. Sometimes the reviews are without a name of a person and so forth. And sometimes it's your competitor who's trying to, be negative because you're beating them. So I think you have to be really vigilant. And there are reputational consulting firms that actually can change the narrative.
Thank you for that. Andrew, did you have anything to add to that? Okay.
But today it's so critical. I mean, it's so critical, because, people are getting information from, of course, TikTok, they're getting their information from all the social media sites. They're communicating with others. I mean, 70–80% of the information is now coming from these online sites. And it's absolutely, and by the way, monitoring it is absolutely critical. Monitoring all these sites is absolutely critical because you want to know what they're saying about you.
Thank you. Earlier on, when you were talking about external or black swan risks, you mentioned some things like the rising groundwater in southern states. How would somebody go about finding out what these types of risks are? They might have no idea in a specific location what the issues are. How could they even begin to find out?
I mean, and in fact, this groundwater risk just came out from ProPublica a couple of weeks ago. Nobody even knew that it existed, but I think, and now it exists. I think, and insurance companies didn't even know about it. But this is a tremendous issue, and I suspect it's all going to be along the East Coast and someday on the West Coast too. And rising groundwater. I think just the vigilance of seeing, what else can go wrong, because I don't think all the insurance companies are there yet. I mean, you've read about in Florida where they built huge apartment complexes in southern Florida. They actually had to raise the roads to the second floor of the apartments because of rising water. And then some of the collapses that you read about in Miami of buildings because of the rising water underground. I think what I would do is make a list of what is black swan risk, what is the potential, what can go wrong. Because the idea from Nassim Taleb's book, The Black Swan, is if it can go wrong, it probably will. It may not happen right away, but I would say a little brainstorming, maybe going out drinking and brainstorming sometimes works really, really well. What can go wrong? What are we missing? What didn't we see? What are others missing? And I'd say over a drink is probably the best thing.
Well, we talk about the power of positive thinking. Perhaps this is an evidence of the power of negative thinking having a potential use as well.
Or Jenny, it's the power of positive thinking about negative things.
Okay, that works. So are there any consulting platforms that you recommend that either connect with professionals who engage in reputation monitoring and consulting or have reputation resources?
I don't think I would want to, identify a particular company, but I think if you just looked up, there are a number of reputational risk companies that are consulting. And I would say, look at their behavior, who their clients are, and then choose one that's closest to your industry or profession or practice, so that they understand the areas of where your business is. But I'd rather not, just recommend one or two. I have certain ones that I'm thinking of, but I'd rather not recommend it.
Understood. All right. Well, we are at time.
Because Jenny, that's because if they miss it, it's on my shoulders.
Understood. We'll keep the recommendation general of what to look for.
Yeah. But you can look
at
advice. Social media reputational risk consultants, and there's some really good ones out there.
Wonderful. We will wrap up for today. Thank you so much, Rick. We appreciate this. Has been very eye-opening on all of the things that we were not thinking about previously, but now know that we should. So thank you for that. It's very eye-opening. I'll turn the time over to Andrew to close in just a moment. I do wish to remind you that you will receive a link to the recording as well as the slides and a follow-up email. Additionally, you will see an evaluation when we close down the webinar. If you have a few minutes to give us some feedback on today's presentation and other topics you would like to learn about, we always appreciate hearing from you. And there are several thanks coming in the chat and the Q&A box, Rick. So I'm passing those on to you.
Thank you.
Many grateful people. And
Okay.
Andrew, I'll hand it to you.
Thanks, Jenny. So a lot of food for thought today, Rick. Thanks so much for going through what was really, really insightful. I think in particular, kind of, boiling it down to individual categories and how to be able to build that into, what you're doing and how you're operating. I think was really, really useful, I think, for all of our small business clients. So thanks for your presentation. And Jenny, as always, thanks for partnering with us and helping pull all this together. It's really valuable for our small business clients. And for all of you here today, if you're not working with an SBDC as of yet, please do use one of the links in the chat to be able to connect with your local center, and look forward to working with you and helping you as you build and you grow your business here in New York State. So thanks.
And
And
Andrew,
well,
I think you
go ahead.
mentioned, and Jenny, that if there are other questions that you would filter them and send them through, because I'd be very happy to answer any questions that come up in the future.
Wonderful. And Andrew, did you have the email address in the chat there for PACE?
Yes, I included it there.
Perfect. Perfect. Okay, so while anybody goes and grabs a link or email address from the chat, I will just say I hope that you go forward and enjoy having positive thoughts about negative things, as Rick has termed it. And come see us at the SBDC. We love helping people think their positive thoughts about negative things as well when it comes to their businesses. And with that, we will wrap for today. Have a great rest of your day, everyone. Bye-bye.